Everyone, welcome to the Dr. Inia Desnia show. Happy to be here today and thanking everybody that has complimented and commented and just being part of this program. Um, this is the Dr. Inia Desnia show. I help SMEs thrive, small and medium-sized enterprises. Of course, everything I say is for informative and educative purposes only. Very important for you to work with a professional. If you don't have a CPA that you're working with, please navigate to my website. That's it. Always making okay, drniadesian.com. And then and then and then of course navigate to my CPA firm. All right. So today I have another interesting topic. And the topic is how can a small business increase cash flow? How do you increase cash flow? And I've talked about getting loans and capital and getting partnership, but I want to focus a little bit more on some kind of inward change, company change, and changes that you can make within your company. Now, of course, there's a laundry list, there's a lot, right? The list is not exhaustive, but I'm just going to pick about three things, and just with this short period of time I have, just expand on that a little bit. All right. Um, One of the things that I want to encourage everyone that deals with inventory is to think of an inventory management system. All right. I know there's something we use in accounting, which is JIT, just in time accounting, for inventory, just in time. That's the inventory management, which means that um, you don't have things on your shelf, right? You don't have things on your shelf, especially if it's you have to, if it's not something that people buy every time. Maybe you have some things that are custom made. So not having things on your shelf, meaning that you don't produce things unless people are ready to buy. All right, you don't produce unless people are ready to buy. And so with that, what happens is that you don't invest money in inventory per se unless you have a buyer. Now, of course, it depends on the kind of company you have. There are some things you have to have always, depending on some products that you might want to have all the time because of the turnover. Like the sale is very, very the turnover, like selling the product is that is really very, should I say, high. People are always wanting that product. But generally, generally, if you have some kind of product that people order, you can see it takes, 1 week to get the product, or give them a time that you can actually meet up with that time, not giving them a time that is too soon, or that you disappoint, right? So think of that, because when you have inventory on the shelf and nobody's buying the product, that's money tied down. That's money that reduces cash flow. Money is in the system, whether in the product, and is not being sold. So you want to make sure that that is something you're managing. Of course, you might not be able to manage it without having an accountant working with you. An accountant will help you set up and look at what you're selling, look at what product is selling more than the others. Make sure that you have a very good inventory management system in place. All right. That's the first one, right? Now, the second one is, I know for the first one, if you're actually a service industry, you might say, oh, yeah, no, you know what? I don't really have inventory. I get it, right? But if you're not a service industry, this one actually goes for everyone. In the if you're not in the if you're in the service industry, you're in the service industry and you're not also, this goes for everyone. Watch your expenses. Watch your expenses. I think I talked briefly on this when I talked about how to minimize your taxes, right? And now minimizing your taxes, I know we talk about spending, but when we're looking at cash flow, we have to be wise in spending, right? Even if you want to reduce your taxes, you don't want to spend money on things you don't need, right? You don't want to spend money on things you don't need. So I would say that what you expense, you want cash flow, right? You want to have more money in your pocket, right? So usually when I analyze things with my clients, I look at the big picture, right? As much as you want to reduce taxes, you don't want to give all your money to expenses. Of course, IRS would, the expense has to be what ordinary and necessary, of course. making sure that you can substantiate those expenses. But even if you can substantiate those expenses, you don't want to be spending money on things you don't need, all right, or things that you can cut down, right? Cut down, reduce that expense. I know even large companies, right? There are some, maybe there are some large companies, big multinational companies, that are looking for ways to just cut costs, reduce costs, right? And they're looking through expenses and say, what can they reduce? So we, or anyone, I'm talking to, when I say we, small and medium-sized enterprises, just what expense is just going on and on, right? What kind of expense are you actually looking at this point in time? So is it that you're spending so much on maybe snacks in the office? You're spending so much lunch, buying lunch all the time for the office. What are you actually spending so much on, right? They could be anything, right? Advertising. I talked about advertising in one of my shows, and I said, when you just don't just pay for advertising if the advertising does not bring results. If it doesn't bring results, do not pay for it. Some people don't notice that, or I guess we see, but we don't know why. When you apply for something or you want to buy something, they'll ask you, where did you hear from us about us? Where did you hear about us? Why is that being asked? So the company will know where to put their marketing funds toward which aspect, which area, right? If it's maybe many people are saying that, oh, I got it from this website. So, okay, so that means that is where I'm going to drive my funding. You're not just throwing money out there because someone says, oh, I can market for you. That's a very good example. So there are so many ways to reduce your expenses. When you reduce expenses, you're spending less. You're spending less. So you don't want that. You don't want to, you don't, you, that's the goal, to spend less when you don't need to spend. All right. Spending less when you don't really need to spend. All right. So check the expenses. Of course, it's very good to work with a professional, right? Another point, the third point is look at your debt. Look at your debt. How do you look at your debt? Now, of course, some of the money you're paying for debt, of course, business debt is coming out of your business account. Now, it's good to sit back and look at the debt. First of all, how much debt do you have? First of all, second of all, the interest rates. What are the interest rate on those debts? Right? So, first of all, I would say renegotiate the interest rate, see if you can bring it down. Do your best to see that. There are so many programs for small businesses. A lot of people don't know. Reach out to these companies and ask, is there anything that I can do to reduce the payments, right? Find out if you can reduce the interest rate. What can I do? All right. That's one of them. You can do that. Second of all, think of refinancing. It could be that there's a way you can get a loan to refinance a debt somehow and cut down a major part of the debt. So these are some things that you can do because look at it. You're paying money for interest. I know that interest is deductible. Excuse me. We know that interest is deductible, right? You're paying money. You're paying money for interest. You're paying that money out to pay for, debt. But if that debt, the amount you're paying for debt reduces, it puts more money in your pocket. All right. So the goal right now is to check, okay, what can we do to make sure, again, we could go on and on. I know that I can put this point out. I wanted to say three, but another point I could put out there is I wanted to give you three, but one of them could be or is that, talk to your vendors, see if there's a way that your vendors can give you net 15, net 30, right? Paying your expenses later, but talk and see if you can get money faster by talking to your customers and talking to your vendors, right? A lot of planning, but these are just a few. The goal here is to get more money, put more money in your pocket. I know you might look at the tax aspect, but when we in the Adesina CPA, this firm, we actually look at the big picture so that even though you're reducing expenses, you are not actually paying more taxes, right? It's just total planning, all around planning. All right. So I hope you learned or you got something today. Of course, know that this is also, again, reiterating for informative and educative purposes only. Please work with a professional and then really get your cash flow going. All right. And of course, to thrive as a small business, you have to be intentional. All right. Thanks for being here. See you next time. Bye for now.